What is going on, investors? Hopefully, guys are doing well out there. That is right. The weekend is here. It is Friday, but more importantly, it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns of the week from all the major FAANG stocks, including Tesla and Netflix, which reported their earnings this week. We are on the eve of earnings. All of these companies outside of NVIDIA will report their earnings by next week. We'll talk about that on today's show. Let's kick things off like we always do with Meta Platforms. Started the week closer to 166, was much higher, up over $182 per share, ended the week closer to 169. The reason why you had that major dip is Snapchat reported their earnings yesterday after the bell. I had full intentions of doing a video on Snapchat's earnings, and then I pulled up the financials, and they are so bad. And I didn't necessarily want to post a video just looking like I'm piling on a stock that is now a $10 stock, and I'm referring to Snapchat, down 38% in one day after reporting their earnings. I've been very consistent on Snapchat. If you go back and look at my old videos, there are some things to like, but the vast majority of their financials are a complete disaster based on the stock-based compensation. This bled through to all the online advertising names, including Meta. We'll certainly see if that weakness that we saw over in Snapchat in terms of they not being able to provide guidance, they seeing a big demand decrease for their online ads. We'll see if that trickles over into Meta as they report their earnings just 5 days from now on July 27th. This is after Meta's Instagram pushes for more content to Reels, which is their video platform, essentially streamlining that offering. Currently, when you go to Instagram, I believe there's a little tab for videos and a tab for Reels. They're just going to put everything into the Reels tab, including shorter form videos and 15-minute videos, which appears to be the limit there. Now, online ad names saw another estimate cut over at Morgan Stanley. This was preceding the Snapchat earnings, which came in. Analysts have just been continuing to walk in their estimates over at these companies. Now, in terms of Meta, we have seen those estimates walk back over at Meta. First of all, they walked them back in terms of their own guidance, but we're seeing now a consensus revenue estimate for Meta in the upcoming quarter. Again, this is on July 27th. We're expecting $29 billion worth of revenue and about $2.60 per share on the earnings side. I should have an earnings preview for Meta up sometime this weekend. And those of you that have been tuned into this program and tuned into Meta's financials understand the significance of $29 billion worth of revenue in one quarter for Meta. This is a mark that Meta has not gotten over outside of a fourth quarter. So a normal advertising environment for Meta, they have not gotten over $29 billion. This is why when all the arguments come down into the comments of the channel saying, well, the PE ratio and the price to sales ratio over at Meta is this, that, and the other, I say, yeah, of course it's low, because in the first, second, and third quarter of this company's existence, it doesn't matter if it's this year or last year, they are not growing. Find me a company that is not growing their top line, and I'll probably show you a company that has a pretty low price to sales, price to earnings multiple you pay for growth in the stock market, and we'll see if Meta is able to beat that $29 billion mark. I tell you what, if they do, you should see upside in this stock next week. Now, Facebook is shifting some resources away from news and newsletter products. I applaud this. I have no idea why. For those of you that don't know, Facebook was actually paying outlets like the New York Times and these publishers out there to put their content on Facebook. It's like, hello, Facebook, these people are going to come to your platform because that's where the users are, that's where the readers are, that's where the clicks are to their website. I have no idea why you were paying them. The New York Times should be paying for you. I actually think this is a great realization on Facebook's part, looking to invest in the creator economy. Certainly when you look at the economics of a YouTube, and certainly maybe even like a TikTok, investing in quote unquote amateur creators is far better than giving your money to the New York Times, the New York Post, who are just going to come to your website and repost their articles anyways. Now, Facebook's Giphy, I believe, acquisition gets a reprieve as a UK tribunal challenges regulators' finder. And so, as you recall, that was a couple of weeks ago, UK kind of struck down this, I think it was about a $400 million deal for this. I think it's a repository of GIFs. So it's like them all kind of collected. Maybe you're allowed to search them and probably post them onto your feeds, maybe add little text and other things to them. Well, the UK wants Facebook to have to divest away from that because they viewed it as anti-competitive. Well, look, the way the courts work is you probably can constantly appeal these types of decisions, and it looks like maybe Facebook might be able to hold on to that asset. We'll see what happens there. Moving on to Apple, started the week at 150, dipped down a little bit, but ended the week higher, up to $154 per share. We're awaiting Apple's earnings next week on July 28th. That's just 6 days from now. Now, Apple reportedly planning to slow down hiring heading into 2023. I don't think there's a company on this list, maybe outside of NVIDIA, that hasn't announced either a slowdown, a freeze, or an all-out kind of elimination of some jobs. Apple joining that group. Now, Apple is likely to meet Q3 results again on July 28th. This is according to Webbush, but all eyes will be on the demand for the iPhone 14, which will have no indication of inside of this earnings report. And I honestly think this is kind of the street's sentiment, is the fact that the Q3 results will be good, and the mystery about the iPhone 14, the demand for that, the sales, any other products that Apple decides to launch at the same time in the upcoming quarter, that will decide if this stock holds this level. If you recall, when we look at this from a technical perspective, it's sitting up towards the top of a downward channel, and that typically means downward and lower prices are coming. And so we'll see if this earnings result is enough to keep it at the top of that channel. If not, push it higher. Apple iPhone shipments in China surged in June. This is according to reports following the COVID lockdowns that were widespread in the country in the month of June. This is according to some kind of data, but they saw that mobile phone shipments rose 9.2% in June as Chinese consumers were locked down. Maybe they felt like they needed a new phone. Moving on to Amazon, probably the biggest news of the week coming out of Amazon. Started the week at $115 per share, ended the week closer to $122 per share. We are also on the eve of earnings from Amazon. They will report the same day as Apple on July 28th, just 6 days from now. Now, Apple bought One Medical for $3.9 billion. One Medical was actually a public company that was trading roughly 60-70% lower when Amazon offered $18 per share for the company. Now, what I like to do is when a company buys another public company, well, you pull up their financials and we'll see what Amazon is actually getting. And what I have here is actually kind of a 12-month guidance that One Medical gave out. This was about a month ago. This was a company that looking to do right about $1 billion worth of total revenue. They were not profitable, but some of the reasons why they weren't profitable or not as close to profitability as they maybe could have is they had excessive stock-based compensation. Okay, just like the Snapchats, the Snowflakes, the Teladoc. There's a lot of companies out there that are just really rewarding the executives and the employees. Twitter is the same example. You look at Block. There's just a lot of stocks out there that get really, really popular that have this excessive stock-based compensation. I almost think the companies pay for this promotion because that's how they're essentially running the company. Not saying that One Medical was doing that, but they adjusted their EBITDA for the last 3 months at negative $30 million. And for the full year, you're close to maybe about $130 million adjusted EBITDA loss. Well, one way you can think about that when Amazon acquires this company is, first of all, there's probably some synergies with Amazon. They'll be able to shed some costs, shed some employees, maybe shed some office space and combine some things. That should help profitability. But I just look at this as, look, a $3.9 billion deal, and they had about $1 billion worth of sales in the upcoming year. So they're paying about 4 times sales for something like this. And this gets Amazon further embedded into kind of the healthcare market, which they made a major acquisition a few years ago of PillPack. And I like these deals for Amazon because there's a lot of companies that would get the ire of regulators. This is not necessarily one of them. They could really move into the healthcare space unabated from a regulatory perspective, and that certainly could be a growth driver for Amazon. Now, we see another integration of an Amazon acquisition. Amazon Zoox passes a key safety test, and it seeks permits out here in California to drive these, not really drive, but the cars themselves are going to drive themselves. These are autonomous cars with no driver. You get in and they basically drive you where you want to go. This was a $1.2 billion acquisition back in 2020, and they achieved a 5-star federal safety crash test, which is probably what you need to achieve before you actually get these on the roads and get paying customers. But it appears they're very close to getting on the road with these out here in California. Now, Rivian EV vans are out in the wild delivering Amazon packages. This news came across earlier this week, and people were almost shocked, and I'm almost shocked that Rivian's not flying to the moon yet based on the valuation that that company has achieved over the last 12 months. Obviously, it's come way down, but people were actually surprised by this. I am not. Based on the amount of investment into that company, they better have some things on the road by now. Moving on to Netflix, reported their earnings this week, and boy, they went well. So if Netflix is any barometer for the rest of these stocks, and we could probably throw Tesla in here as well, which we'll talk about here in a moment, but these earnings went well, and these stocks actually busted out of technical ranges. And if the rest of these stocks do it, hello, the rest of your portfolio is going to have a great week next week. Netflix started the week at $194 after earnings, boom, all the way up to $220 per share. This is after reporting their Q2 earnings, which I think the key bit of this was they were expecting to lose 2 million subscribers over at Netflix. They ended up losing just 1 million subscribers, and then they gave guidance for the upcoming quarter. They're expected to gain 1 million subscribers, so it has some people thinking, well, maybe Netflix's subscriber losses were just a one-time thing. But there are some indications, according to CEO Reed Hastings. He says that there was basically one single thing that boosted the company's Q2 performance and probably boosted their Q3 outlook as well, is the fact that you had that mega hit Stranger Things premiere on the platform, and that obviously absorbed a lot of people wanting to watch that, maybe restart a Netflix subscription, maybe start one for the first time. And so we're seeing some interesting things over at Netflix. Now, there's some good and bad based on relying on one major hit like a Stranger Things. It shows you that literally just one hit show, and I know this is like a mega hit show, but one mega hit show can turn around a company's financials and their stocks on a dime. Now, that's obviously a negative thing, because if interest in Stranger Things goes away, or if they only can produce these kind of one hit wonders every so often, certainly will lead to some fluctuation in Netflix. And quite frankly, this has been the risk with Netflix for a while, but it does show you, well, if you could, and I know it's easier said than done, if everybody could create a Stranger Things, we'd all be rich and wealthy and living in Hollywood, okay? But if Netflix is able to repeat this success to a certain degree, not necessarily to that degree, Stranger Things degree, but if they can somehow repeat this success, certainly bullish for the stock in the long term. Now, Netflix's product VP is exiting to return to filmmaking. He had been with the company for nearly 17 years. When you open up your Netflix app, you hear that ta-dum. This guy is credited with kind of creating that among other different types of interfaces over at Netflix. He's going to go to the content side outside of Netflix and get back to filmmaking. Interesting there. Moving on to NVIDIA, started the week at $164 per share, ended the week closer to $173. NVIDIA is the one stock that does not report earnings next week out of these group. Now, NVIDIA, Advanced Micro Devices, Intel, a lot of chip names led higher this week after House Majority Leader, I think, Nancy Pelosi signals support for the bill. Now, the most interesting thing is she bought I'm referring to Nancy Pelosi, who is a politician out here in California. She and her husband exercised millions. We're talking about millions of dollars in call options, which are essentially bullish bets on NVIDIA. And then she came out and said she had support for this bill. How is this stuff legal? I guess it is. Now, NVIDIA Advanced Micro Devices lead chips rally as Senator Schumer, who I think is the majority leader in the Senate. So you have Nancy Pelosi in the House, you have Senator Schumer, they're both Democrats. Schumer leads the Senate, obviously at a thin majority, but he says they are moving forward on this bill, and this is obviously the CHIPS Act bill, which we've talked about will provide funding to manufacture chips here in the United States. There's some sites in Arizona, there's some sites in Ohio, I think there's some sites outside that here in the United States wouldn't necessarily directly impact NVIDIA and AMD, who do not do their own fabbing, but it could give them more options than just relying on TSM and Samsung for the most part on most global chips out there. Moving on to Google, start of the week at 111, ended the week closer to 107. I did step in here a little bit. Just a spoiler alert, I am working on a preview video for Google, and I said today, man, this company has some amazing assets that I think if you looked at a sum of a parts valuation on Google, worth way more than a trillion and a half. Believe it or not, this company I think should be worth more than a trillion and a half. I stepped in today, not something I recommend. This is why I'm saying it after the hours. I'm not recommending getting in on Monday because Google reports their earnings along with Microsoft 4 days from now on July 26th. I saw a little bit of weakness here. I stepped in on Google. I was a little underweight this stock anyways because of the high share price. We obviously saw this stock split its shares. I think it was this week. That's why we're not talking about this being $2,000 per share. Just wanted to say that I did move in on Google a little bit this week. Now, this is on the heels of Google being fined $387 million by a Russian court for not removing content. Now, Google's subsidiary in the Russian country has filed for bankruptcy, so whether or not they have to pay this $387 surely remains to be seen there. Now, Mandiant, which is a $5.4 billion planned acquisition by Google, this appears to be getting DOJ antitrust approval, and it looks like this will probably close by the end of the year. Now, Shopify expands a cooperation with Google via a YouTube partnership. So essentially, someone like me who has a YouTube channel, I can have a Shopify store and I can kind of link those products into my YouTube feed. I actually thought this was probably slightly bullish for Shopify because I thought this might just allow me to utilize some of Shopify's technology but not actually have a store with them. No, this requires me to have a $30, $40, $100, $200 a month subscription to Shopify, which I think is bullish for them. We'll certainly cover Shopify's earnings. I think they're about 2 weeks away. We'll cover that. That stock has pulled back into a price area where I thought it would come, and so we'll talk about that, whether or not that's a good buying opportunity here when they report their earnings. Now, Google looks to avoid past mistakes with a relaunch of the Glass successor. Now, some of you younger investors or just younger people in general might not remember that Google made a big splash several years ago. I think Sergey Brin was still the CEO, or maybe he was just kind of put in charge of the Glass product. This was kind of a dorky looking AR kind of VR glasses set, basically like a pair of glasses, but a lot more dorky than you'd rather want to have put on your face. It was certainly before its time. It was before cell phones had really taken off. It was probably even before like the Apple Watch and those types of things. I actually think a device like this is absolutely brilliant. I think this is the transition between our cell phone and obviously the Oculus, and Apple might have a device that you strap onto your face and you literally are immersed in that world. I actually think a augmented piece of glass or a pair of glasses is certainly something that people will transition to far faster than slapping on some heavy goggles and some arm joysticks and some headphones and stuff like that and be immersed in the world. So I'm glad to see Google reinvest in that area. Now, Google is pausing their hiring for 2 weeks. So according to a report, we see that across the board with all these tech companies. Now, moving on to Microsoft, start of the week closer to 260, ended the week close to 260 again. They report their earnings just 4 days from now, along with Google on July 26th. Now, Microsoft dips as it reportedly cut jobs in listings for Azure and security. Spoiler alert out there for job listings. Companies like Microsoft pay these massive fees. They also own LinkedIn, so it's like they can probably post jobs for free on LinkedIn. But maybe on like other sites like Indeed, they buy these mega subscriptions and they just leave these jobs up to get a bunch of applicants, okay? And so when they pull listings, it's not really that big of a deal. It's so competitive for talent that you're constantly out there looking for it. These companies obviously feel like, hey, maybe we can take a pause right now and not have to deal with all that kind of HR mess and just focus on the employees that we have. I actually think that's bullish for the tech industry in the longer run. Moving on to Tesla. Speaking of bullish, start of the week at, is that right? $746 per share. Boom. After earnings, all the way up to $800, and I see in the after hours, $815 per share on Tesla. This is on the heels heels of announcing their Q2 earnings on Wednesday, July 20th. They came out with revenue close to $17 billion. That was 41% year-over-year growth. Automotive vehicle gross margins came in at 27.9. I think off the top of my head, operating margins were right at about 14%. And I did a Tesla video here on the channel like I always do. I did even a preview video of the Tesla video, and I got like a dozen comments on my Tesla video saying, well, I like your analysis, but you're quite a bit biased towards Tesla. Guys, newsflash, find me any company, I don't care if they're selling dog manure or electric cars, that has 41% top line growth on their revenue. And this is on the heels of their number one factory, their number one place to make cars had a countrywide shutdown due to a pandemic. They still produced 41% growth on that top line. On the product that they're manufacturing, they have nearly 28% margins, and we're in an environment where you have 9% inflation. And on top of that, you have positive operating margins close to 14%. Folks, find me a company that has 40% top line growth, 30% gross margins, and 14% operating margins. Again, I don't care if it's manure or electric cars, I would be very excited about that. And if you're not excited about 40% top line growth, 28% margins, and 14% operating profits, you're not an investor. Go knock on the door of Charles Schwab or an Edwards Jones or a Fisher Investments. Give them your money. Give them a fee every year. Let them handle your money. You clearly are not an investor if you don't get excited by 40% revenue growth, 28% gross margins, and 14% operating profits. If you don't have any idea how that all adds up into a great investment, you're not an investor. You're in kindergarten. You need to figure things out. It's not that I love Tesla so much. Believe me, I have Tesla cars in my driveway, but if gas was $2 or $3, I'd have Mercedes out there. I like these cars, but believe me, they're not even close. If you sat in an $80, $90, $100,000 Mercedes, a Tesla is a step down, but there's absolutely no way I am paying $7 for gas. That is ridiculous. Now, this all comes at a price for Tesla. Obviously, we know the forward PE is close to 60. The price to sales multiple is elevated, but I just went through the financials on this one. There's a reason why they're elevated. Now, the story for Tesla will be the back half of the year. It will be the shutdowns in China, or maybe not the shutdowns in China. It'll also be a little bit less of a story, but the ramp up in Texas Gigafactory and the Berlin Gigafactory. If all of that stuff can fire on all cylinders, it's probably priced into the stock a little bit for the most part. If Tesla sees shutdowns in China, if it sees slowing ramp of its product, or just broadly, you see a decline in demand for its product, which quite frankly could happen if you have interest rates continue to tick up, it becomes harder and harder to finance a $60,000, $70,000 car at a 7, 8, 9% automobile APR. So I'm not sitting here saying there aren't risks to Tesla. There's not a lot of things that could be hiccups and bumps down the road, but if you fire on all cylinders over at Tesla, this is one of the best companies that you can invest in my opinion, from a growth perspective. Again, we're the majority of our portfolio is in the Apples, the Googles, the Microsofts, the companies that are doing buybacks and paying dividends and have just this gigantic cash pile and market advantage. But you need a little bit of growth in your portfolio if you're my age. The NVIDIAs, the Teslas, the AMDs, multiple companies out there can provide that, the Amazons as well. Now, Bitcoin, crypto stocks slid as they realized Tesla kind of dumped the rest of their Bitcoin. I think they're still holding Dogecoin and a small amount of Bitcoin as they unloaded those assets in the most recent quarter. Now, moving on to the technical segment of the show. I posted a video yesterday. I showed you every individual sector of the S&P 500 is sitting. So all these stocks from the S&P 500 to the SMH to the XLI, I mean, they're all basically in this downward channel formation. Most of the stocks in the FAANG group are in this downward channel, and we're setting up towards the top. Typically, what has this meant over the last 6 months? Well, a big red candle is going to show up over the next couple of weeks, guys, and we're going to probably retest these lows on the S&P 500 down here south of 3,600. If you do that, I think there's some buying opportunities. The exciting thing is if something different happens, okay? I don't really care if the markets go up or down. I'm trying to accumulate stocks. Quite frankly, I'd like to see them go down, but from a technical perspective, the exciting thing would actually be to break above this, retest some highs here. I personally would bet on these markets heading lower, but I think all of it hinges on earnings next week. And so this is why we have an entire channel channel here on YouTube revolved almost exclusively around the earnings of these companies. Next week is so important. If Apple lays a brick, if Google and Microsoft have struggle like Snapchat or any of these other companies that we've seen struggle, well, yeah, you guess these markets are probably going to go much lower. Now, Meta did something very interesting this week from a technical perspective. You noticed, and we're talking about in the very, very shorter term, Meta had a little bit of like kind of some higher lows. It was somewhat confirmed by higher highs with this one. So you did have a little bit of an uptrend viewing with Meta Platforms. Again, heading into earnings on July 27th. It actually broke above this. This is what we're looking for the broader trend. Obviously, the broader trend, or more the intermediate trend with Facebook, essentially since their last earnings date, has been in this downward channel. So breaking kind of a smaller channel, not that big of a deal. Really, with Meta, what you're looking for after earnings next week is a push higher than $200 per share. $200 per share is right here. That would put you at the top of this range. You need to push, and I'll show you here in a minute, like Netflix, well over and above that. If you do that, you've got a nice move potentially on Meta heading into next week. That is obviously the bull case scenario. If this lays a brick like Snapchat, we would 100% believe that Meta will likely test the lows that it made back in June down here at about $155 per share. We think that probably 150 is in play with Meta. If you sit right there at 150 on Meta and they do $29 billion, obviously I'll talk about this in our preview show with Meta. I'll talk about this in our Meta earnings video that we do after the bell, and we see the result of the earnings, at least from a very quick perspective from this stock chart. But I'm telling you now, if you get a drop down here to the bottom and Meta shows that they are still earning right in that $29 billion range in terms of that revenue, certainly if they come over $29 billion and they drop down, I think that's an absolute great place to buy. But as long as they're in that $29 billion range and everything else sounds decent on the phone call that they have, well, yeah, I think you got a buying opportunity coming with Meta if it drops out the bottom. At least from a shorter term perspective, you'd expect this technical pattern to hold. You drop down here to 140. You probably follow it up with green candles in the coming weeks and months ahead, and you make some profits on the sideways chop. Obviously, you can go short these names. I don't typically mention that here on the show. I'm not here to guide you through every trade like I'm your parent or I'm like holding your hand on everything. Some of this stuff you've got to figure out yourself, but that's how I see that one potentially playing out heading into earnings. Now, Apple heading into earnings 6 days from now on July 28th. We've talked about it for 3 or 4 weeks now on the show. We talked about how there was a possibility, I think you set up towards the top of this range. The channel might be here, honestly, with Apple. So we might actually be at the top of this range. And so what is the news on Apple's earnings report that would bust this up over and back to the highs that we saw just a couple of months ago at about $175 per share? What's the news going to have to be over at Apple? I don't think it's in the cards. I honestly don't think Apple has that in their toolbox. I think we probably come down after earnings, maybe not immediately after earnings. I mean, we could easily probably pop up after earnings, but I think you come back and retest. Again, I have a ton of lines on here. First of all, I want to show you that this green line, this is a longer term uptrend. As long as you stay above this longer term uptrend is intact. I'll take that out for just a visual acuity. We probably don't need that one in here as well. We've got some support at 137. If Apple pulls back after earnings, you get a pullback to 137. That to me is a good spot. Again, plus or minus 4 or 5%. That would support still this stock being in a longer term uptrend. It would pull us back onto this. We're still locked in a downward channel, but you could buy it there, play a pop, those types of things. Now, moving on to Amazon. This one did something interesting from a technical perspective. Again, we did not have Amazon earnings this week. They report 6 days from now on July 28th, but this one actually broke above. So notice that in the very short term, we're talking micro trend here, we were making higher lows. It was not being confirmed with higher highs. That actually broke this week. Okay. Now what ended up happening is we might be flattening out here. You could argue that, but these highs are very close to the previous highs. This is exactly what you look for in a trend reversal with Amazon. But for the most part, this is setting up like a lot like Apple and like a lot of these stocks heading into earnings. They set up towards the top of an area of demand. What is it going to take for Amazon to burst out above this? I don't know. I think they probably have some tools in their tool case to get this above, some glowing guidance, some upside surprise in the e-commerce business, the margins, the growth stuff. All that stuff could come forth with Amazon, but I think your upside is back up into the 140s, maybe all the way up to 150. You should see some pretty heavy resistance as you head up north of 130 on Amazon. A retracement back to the 110s, again, just means that this green trend line, this is still intact. A retracement back to there holds that intact. You break all the way through that, that would basically wipe out all of this shorter term trend. Again, kind of the intermediate trend. We're very much down with pretty much all of these stocks. Shorter term trend up, pullback again, repeat myself, south of $100 per share on Amazon. Certainly a buying opportunity. Now, Netflix is kind of previewing from a technical perspective what the rest of these stocks can do. I'm going to clean this chart up. This is way too many lines. I think this might be a little complicated for what we're trying to do here on the program, but notice that we went on this massive run with Netflix. It all preceded by the fact that we were making kind of higher lows all along here, and then boom, right in the middle of July, again, right before this company announced earnings, which I thought was interesting, it ran up and it continued to run after earnings. You've probably got green skies ahead, all the way back to the gap that you made after the last earnings, up here at about $240 per share. If you want to take profits on your Netflix, you bought them down here. This is personally where I think you think about taking profits, because I would expect sellers to emerge when you approach this 240 range. You pull back on Netflix. The good thing is you've raced a ton of technical damage. When you make a move from 170 to 220 in a week, you erase a lot of bad things. Okay, now all of a sudden you are making higher highs with this stock. You're making higher lows. Folks, this is a mini uptrend with this stock. That means, at least in the shorter term, you can buy these dips. You get a pullback in Netflix down to about south of 190, quite frankly, and it can create a buying opportunity. Moving on to NVIDIA, this one got steep on this downtrend. I'm going to change our downtrend just a little bit. I'm going to tweak it just a little bit. Even with that tweak, we have busted out over that with NVIDIA. I'll zoom in on our price action here, try to make this look a little bit prettier. Sorry, we're struggling with the charts today, but I think what we're seeing with NVIDIA, and I think we'll see this with a lot of stocks, is they are starting to look a little more sideways. Okay, you notice over the last 2 or 3 months with NVIDIA, we've traded between about 145 and 180. I know that's a big spread from a percentage perspective, but the vast majority of candles are kind of tightening into that range. I would expect some kind of pullback. Again, we're a ways away from NVIDIA earnings. Maybe that CHIP Acts bill. I tell you what, if that CHIP Acts bill, wait till it gets signed before you start counting your chickens there. If it doesn't get signed, it doesn't get passed. I think both the Senate and the House are up against an August recess, and obviously elections in November. So that complicates things. If you get a pullback in NVIDIA south of 160, I think that still is the buying opportunity. Now, moving on to Google, looking a little bit like Amazon, but probably a little tighter. You'll see the reasons why I stepped in on this one on a Friday. This was primarily from a technical perspective. With Google, you're making these higher lows. And so even with today's drop, I'll probably zoom in just a little bit more here. You see this red candle was the drop today. It's still above the previous series of lows, which are down here closer. I mean, it's just like by $1 or so. But for the most part, you're making this type of formation. I'm also betting on next week that this was an overreaction to Snap's poor quality of product and poor financials, that Google might be able to lead that as an online advertiser. If I was advertising across 4 or 5 websites, Snapchat would be the first one I pull. Google would probably be the last, again, depending on the product, but the vast majority of online advertisers would probably agree with me. Now, moving on to Microsoft, this one also setting up towards the top of the channel. It's pulled back a little bit, but it's spending a lot of time towards the top of the channel. What's it going to take for Microsoft to bust out above to the top of the channel? We need actually to get well above the top of the channel. We need to get up here probably 290 on this stock. It's just only about $30, but the opposite could be true with Microsoft. A pull back after earnings, which occur on July 26th, just 4 days from now with Microsoft. You get a pull south of 240 on this one. I think that's an excellent buying opportunity for Microsoft, especially for the longer term. Now, finally, Tesla looking a little bit like Netflix in the fact that after earnings, it actually broke above this channel. When I was doing my Tesla earnings video, the stock in the after hours wasn't outside of this wedge. So we've identified this wedge with Tesla. We're making higher lows, but we're actually making lower highs. It kind of wedged out after earnings. It was like, oh, wait. This company has 14% profit margins and 40% top line growth. Everybody on Wall Street kind of scratched their head and said, I bet if I looked around Wall Street, I can't find many profitable companies with profitable profit margins with almost no debt and growing their top line by 40% when their number one facility was shut down by COVID. And they had a lot of problems in the quarter. They still grew their revenues by 40%. So if things go better in the third and fourth quarter, I think that's what people start to realize. Now, the thing is to understand with Tesla, this thing could have a monster move all the way up here to $1,000 per share. We would still be locked in that downward channel that we see with Microsoft and Google and all these stocks. If you want to take profits on your Tesla shares, it's up here. If you're out there and you're in the bear case scenario of Tesla, look, I can see your argument. I could have a whole channel dedicated to being a Tesla bear. Trust me, I understand both sides of this company. I would not be bearish at the bottom of a technical channel. I would get bearish at the top of the channel, okay? When Tesla's up here at $1,000 per share, I'll probably be saying, I'm probably taking profits here. I'm definitely not buying. I'm waiting for some kind of pullback since that is what the technical pattern has been with Tesla. We'll see how that materializes. Obviously, they're past their earnings date, and if Tesla and Netflix are any clue, well, I tell you what, the rest of these stocks are ready for a breakout. We'll see if it materializes next week. Such a big week in the stock market. We'll certainly be here to cover it. Hit that subscribe button, hit that like button, and be sure to come back next week on the FAANG Stock Recap Show. We'll recap all the major news, which there'll likely be a lot heading into next week. Hopefully, you guys have a wonderful weekend out there. Stay safe. We'll see you again next week. Good luck with your investments.